Good morning, everyone. We are at December 5th, about 30 minutes before the stock market's going to open. And you are on the live stream to look at stocks. We're going to look at stocks fundamentally and technically. I am joined by my colleague, Daryl. Good morning, Daryl. How are you?
I'm doing very well, Victor. It's good to be here. Thank you for having me.
You are welcome, sir. It is a pleasure. I get a lot out of your analysis. And we are making it through the first week of December. This week has been it's kind of a swirl of a week, and I'm showing the heat map, and it kind of makes the point that I'm trying to make, which is some stocks are nice and red and some are nice and green. It's kind of, not exactly a theme, all stocks moved in one direction. Nope. Some stocks moved higher, some moved lower, and some stocks had a good day followed by a bad day and just back and forth. So if you were in the right stocks, you made it through the week with some positives, and Meta really got through the week quite nicely. They've been on a rally. They sold off in the most recent news that caused a 3.5% rise is they got the news. They got the feedback from the earnings call where you're spending too much capital. So they said, hey, we're going to spend less capital and we're going to pull back on all that spend. And the market said, okay, great. I'm glad you listened. And it took the stock higher. And that's after the stock had already been on a nice rise. That might be a stock worth looking at on our stream.
I
just
agree.
To study it, because Meta, it's if you can make money on like 10 stocks, if you get to know them, it's almost like you know their behavior, when they're priced too high, when they're priced too low, and you can just buy at the right times. It's a clear way of making money. Meta's such a stock. It'll show you points when the investing in Meta is very clear. And I think we had a moment like that coming out of late October into November, and we'll point that out. Other stocks like Google, they've been on an overall 7-month tear. They've more than doubled over the last year and are really, they've got a lot of momentum. The market has deemed them to be I would say one of the top most important AI companies now, along with all their other great businesses. And maybe up there, there's two companies that are now leading the charge, which is Google and Nvidia. These are the two companies that are like, creating the biggest wake in the ocean that is the stock market. And I think Google really does deserve this type of attention, valuation, appreciation, because they are loaded. Their businesses are strong, powerful, and are I think are destined to make Google the most valuable company on the exchange. Nvidia pulled back for a while. Geez, the stock price became discounted, in my opinion, became a decent buy. I did buy a few shares. I am up on Nvidia now, but have recently had a nice little rally. This week, Nvidia made it through the week quite nicely. Microsoft had some headaches earlier in the week. Their adoption of AI products, where I think the Copilot product is not selling all that well. I think the market's not liking the product, and the stock sold off for a few days this week. The software space, super interesting to me. We've seen some signs of life, a little more activity here. Now, we're not seeing it, but UiPath had a terrific day. They went up a lot, and they deserved it. Good earnings. But we're seeing good growth in software, good revenue growth, great profits, cash flows. And CRM, Salesforce, had a good day yesterday. following their earnings report. Not all companies had great earnings. And in fact, DocuSign is under pressure today as we open the market. They announced their earnings yesterday, and I thought their earnings were good. But I think the market expected a little more pizzazz, a little more growth, a little more positive news, and they didn't get it. So they're selling off DocuSign. But there are positive signs. Salesforce, UiPath. I think I'm forgetting a couple. Of course, earlier in the week, MDB, MongoDB, they had a terrific Tuesday following their earnings report. So this is a space that I'm really keeping an eye on because I think I can make a lot of money in 2026 in this space, because this space has been beaten down. It's been ignored while the market's been putting a lot of capital into the AI build out. Nvidia, Broadcom, I mean, these are big caps, man. This is over 4 trillion. This is approaching 2 trillion, just those two stocks. And of course, you have all the others that have been receiving investor capital because they're AI stocks. And it's ignored a lot of what has been a terrific industry for the last 30 years. And I think they're going to come back, and they're going to have a lot of, they're going to have good long-term gains, in my opinion. So I'm really keeping an eye on that area. Other spaces that I wanted to comment on. Financials was mostly green. Looks like Visa sold off, MasterCard. I'm really liking what I'm seeing out of Visa. I'm keeping an eye on Visa and may start buying into that stock. I like their valuation. It's definitely a monopoly-like business. Their network is just continues to grow. It's a necessity, and they make a lot of money. Super high margins, great cash. Everything is very predictable with Visa. So I like what I'm seeing there. And if the market's going to sell it off, I would definitely be a buyer. Healthcare did not have a good day yesterday, but it's had a couple good days this week. Definitely Monday, Tuesday was good for the market. It looks like it's under pressure, was under pressure yesterday. This is one day, so this is Thursday's heat map. Before I forget, we have a new member, Pierre. Great to have you. Thanks for joining. Really appreciate it. And I hope you get a ton of value from the channel. If you are on this live stream, just to make you aware, as a member, you can put stock symbols on the chat. We could review those stock symbols, provide comments, analyze those stocks. Any member can do that. And I also emailed you a list of the other perks that you get. And thank you so much for being a member. All right, so let's talk a little bit about the economy. I've been asked a few times, hey, what's going to happen with the economy and how's that going to impact stocks? So I'll let you lead. You know, what are you thinking for 2026 is going to be the theme? Like, hey, this generally is going to happen, and this is how it's going to affect stocks.
So there's a couple of tailwinds that I'm going to be watching for. One is just the influence of the some recent legislation that I think is going to provide some impetus to equities. And then the second big item is revisions to the tax code. The IRS was slow to update the withholding tables this year. So in addition to the tax changes for next year and them withholding too much from people's paychecks, tax refunds, I think, are going to be quite a bit larger than normal next year. And that's going to provide some support for the economy. So those are two things that I'm watching for next year that I think will be supportive of the economy. And it doesn't seem that tariffs, even though nobody likes tariffs, the tariffs haven't really impacted companies' earnings very much. Next year, they're expected to be, I think, $319 for the 2026 earnings. I saw this from FactSet. Um, Analysts typically overestimate earnings by about 6%, 6.2%. So if you remove that 6.2% from that 319 value, you still end up at like 290 for next year's earnings, which is still going to be a record. So it seems like companies next year, if they can hit those targets, that we're going to have another year of record earnings. So there's three things just kind of right off the top of my head that I believe are supportive of the economy next year.
I agree with you. And the administration we have, one of the things that they, I think, use as a centerpiece to, what they intend on doing is making the stock market go higher, lowering interest rates, making, business kind of flourish in the U.S. And I think that's also going to help. I think the president is going to try to push growth, and that's going to help stocks. So that's also going to help. Lower interest rates are going to help. So now that's not, baked in. We can have some surprises. We can have a conflict that derails that type of, I would say, moderately positive thinking. But that's what I'm expecting. And Daryl weighed in. I weighed in. Now let's see what Gemini has to say about the topic. I asked Gemini, what's the economic forecast for 26 and 27? And Gemini did its research and says that largely predict continued moderate growth for the U.S. economy, with most experts indicating a recession is unlikely during that period. The general consensus suggests an acceleration in growth after a potential slowdown in early 2026. So we're expecting GDP growth, real GDP growth of 1.8 to 2.4% in 26, and then 2% in 27. So that's not.
This is real GDP, just for everyone's knowledge here. That takes into account inflation. So it takes inflation off the growth. So that's what real GDP is. So we're expecting 1.8 to 2.4 in real terms.
And the key drivers behind that forecast is the significant capital expenditures for AI. So the data centers are being built. You have these massive data centers, and it's almost like, they already started construction, so they have to complete it, or else you would completely write off the money you've put in. So these multi-year projects are going to continue to pull in or spend money on contractors, materials, computer chips, technology, all the things that need to build out that data center, power generation equipment, power transfer equipment, all that stuff will have to continue to be spent on, because you can't stop midstream, right? Because then there'd be a complete loss. The other thing is fiscal and monetary policy. I think this is a kind of a different way of commenting on what Daryl mentioned, which were the tax cuts are coming into play, interest rate cuts. So that is going to help the economy. And then a resilient consumer. Okay, so we are in a consumption-based economy. It's no secret. It's so easy to spend money in the U.S., isn't it? You don't even have to leave your house. You just need a data signal and a phone, and you can order on Amazon. If you get hungry, you go on DoorDash and get food delivered to you. you don't even have to have a car. You could spend money on transportation without owning a car because you can fetch an Uber and all kinds of spending opportunities for that consumer. So the US makes it very, very easy to spend money. And the consumer is pretty much, ready to spend money in most years. And I don't think it's going to slow down. I don't see a big move toward being a super saver economy. Now, I've read about this. I haven't lived in China, but I've heard that that's a really high saving economy. Like people there, they save money. They save money in big quantities. It's a different game out there. And I'm invested in China. One of the companies I invest is a brokerage company because I think all that savings is going to end up in the stock market in Hong Kong and in Shanghai. Back to the U.S. So these drivers are, they're drivers that I agree with. And I also like that we're seeing modest growth. And okay, that's good. And I think earnings and profits are going to continue to expand. The tariffs, I think, are kind of not going to be a big issue in 2026. We'll see. So the economy should be okay. I've been asked a few questions along the way about the economy, and some investors are worried, hey, are we going to see a pullback? Now, it is probably natural to think, you know what, we've been on a really nice run for 3 years. At what point is this, going to stop? When are we going to see a pullback in stocks? And we did see a pretty good one in 2022. The S&P, I think, was down about 25%. And that was a pretty good one. And for about a year, we just kept grinding lower and stocks kept getting more attractive. And it was a great time to buy stocks. And we had a couple rallies that seemed like, man, we're going to get out of it. Nope, down further. But since then, man, we have been on an upward trend for 3 years. So in a way, it's like, hey, at what point are we going to see another pretty good, long-term sell-off? I don't know that we're going to see it in 26. My expectation is we're probably not going to see it in 26. I also think what's healthy recently is that the market started to sell off really expensive stocks. Really expensive stocks were announcing terrific earnings. Nvidia, incredible earnings. Some of the best earnings I've ever seen. Like these things were like you couldn't write this. Like they were just so darn good. You had other companies like Uber, phenomenal earnings reports, just really good. Stock sold off. Why? Investors, I think, believed, stock prices are pretty high and investors were taking profits. What I think is that's a good thing because it now reduced those stock prices and gives investors that have a fundamental point of view a better investing level. Like, hey, we can invest better. Like, heck, Nvidia became investable. Meta became very investable. Google was already very investable. And I can go on and on. Amazon's very investable. So I think this little pullback has been a good pullback as we go into 2026. I think it's going to serve us well. And then we'll see if we see stocks rally higher. I'll begin to get worried. Man, we're priced too high. I'll sell some stocks, create some cash, and wait for the next pullback to take advantage of it. Let me think last half real quick, and then we're going to get back to you, Daryl. Thank you for the super sticker. I appreciate it very much. If there's a stock you'd like us to look at, please let me know. What were you going to say, Daryl?
I have one chart that I watch pretty closely, and it has to do with I just have the S&P 500 on the top. Then I have XLY, which is discretionary, over staples, XLP. Then I look at the correlation between those two compared to the S&P. And then we look at the discretionary and the staples on separate lines. So back in 2022, when we had the discretionary really drop off, we also had the S&P down that year. And the correlation for that, you can see, stayed above 0 for nearly the entire year. So discretionary went down, staples stayed almost flat. They ended the year where they started the year. So you want to keep an eye on the discretionary sector. Then in end of 2023 through the middle or fall of 2024, we had the S&P going up. The XLY over the XLP was pretty flat, and that's because the XLY and the XLP staples were both going up. So that looks at the difference between the two was pretty much flat, but we had a really good year. Okay, then we got to the beginning of 2025. You remember that was a huge sell-off. You got to watch this discretionary, because once it started falling off, then you know that the S&P is going to follow, because those are pretty big caps in the discretionary. Staples did make progress during that part of the year. Remainder of the year, S&P was up, discretionary was up, and staples were down slightly. Okay, so I started watching how are we doing at the beginning of this year or the end of this year, and I started seeing the XLY starting to trail off. When it does that, you start worrying a little bit, because when it follows that pattern, you can almost expect the S&P to drop. And then it got down to a point around the 20th of November where it did pick back up, and the XLY is right back to where it was. Mm-hmm. So if you'd have asked me 2 weeks ago if I was getting a bit worried, I would have said yes. But we have recovered. So I'm keeping an eye on these ratios. Staples is going up. So the market has broadened out a little bit and moving back into staples. But that is not necessarily at the expense of discretionary at this point, because we're back to basically an all-time high here. So these are some ratios that I watch very closely to get an idea of what I'm expecting as we move along through the calendar year.
Yeah, and the sell-off we saw on some of these stocks, again, there was I would say I would put an asterisk on some of the sell-offs back to Nvidia, right? It sold off after its earnings, and the asterisk that I would have put was their earnings were terrific. Uber sold off. Earnings were terrific. Yeah. And there are a few that deserved like the sell-off, like Meta, they deserved it. But some of the stocks, it was like, well, this is kind of weird. Good news is bad news now. It was just the stock price was too high, so it just naturally lowered it. So I think we're going to be in better shape. Okay, so big news today. Netflix is going to acquire Warner Brothers. It's going to take over HBO, which is a real good network. I've enjoyed a lot of HBO shows, great content. I can go down the list of what they do. They do it well. And of course, they have the studio. Warner Brothers has a lot of good movies there. They have a lot of iconic, characters are owned by Warner Brothers, and I think they own like a theme park, right? So I wonder what they're going to do with that, or at least they operate a theme park. Not sure what they're going to do with that. I think they're going to take that piece and sell it off. So I think it's going to make Netflix, certainly their library, it's going to expand. That's a positive for their consumer. And we will see how this plays out. High level, very, very high level. I don't think this is going to be good for Netflix. Big acquisitions, big mergers usually don't work. Yes, Netflix is going to be a bigger enterprise. They're going to have a bigger library of content. It's going to take a couple years for it to sort itself out. First, they have to get through the hurdles from regulators and all that good stuff, and then they're going to have a date when they're going to be a combined company, and then they're going to, once they are officially, a part of the same company, then they're going to have a lot of work to integrate the two businesses and bring together, all these pieces. And then once that'll take at least a year. So we're probably like 2 years from seeing some really cool content from Warner Brothers land on Netflix. And I think the consumer is probably going to win out of this, but I don't know that Netflix stock is going to be all that much more valuable. When I've looked at Warner Brothers in the past, and I think we should look at the companies, Warner Brothers did carry quite a bit of debt. So Netflix is going to either have to assume the debt or pay off the debt. Netflix themselves are going to have to go to the debt markets and put debt on their balance sheet. That's a net negative overall for evaluation in my book. And, again, these big mergers, not a real great track record. I mean, not so long ago, AT&T acquired Warner Brothers and it didn't work. They ended up spinning it off like, hey, we can't handle the media business. Now, maybe that wasn't a good match. This match might be better. But we'll see how this thing plays out. I'm a Netflix, I would say I've been an investor in and out successfully. I've made money on it. I'm currently out of Netflix. I think the stock is priced too high. And that's before this merger. Before this merger, I had the stock trading 11% too high. And the recent, stock, and I'll let Daryl look at the charts. I don't think Netflix has been on any kind of rally. It's been, I would say, consolidating, just trading sideways, and it's an 11% too high stock price. That's been my opinion. I sold it a while back after making a really good gain because this stock was really, really beaten down, and it became a huge opportunity. Way back in 2022, back when stock prices were cheap, it was like buy one and get one free kind of deals. And since then, the stock's really flourished. I probably sold around here, and the stock went higher. Congratulations to all those, but I locked in a great gain and I moved on. And since then, it's had its moments where it's like, whoa, it's really selling off. And more recently, I think this is what I wanted to point out. It hasn't been a really fun ride for the last 5 months over at Netflix. It's been down 23%. So their sell-off started before the sell-off that we saw in November. So the Netflix stock price wasn't really showing any kind of momentum. And we'll see how this big merger plays out. But it's not like all of a sudden Netflix is a lot more valuable. I think that being a Netflix customer is going to be more interesting. We're going to get to see more stuff. But we'll see how it plays out over the next 2 years. What are your comments on Netflix, Daryl?
Well, they have been on a downtrend. Their 200 days still moving up. Their 50 days declining. Their 21-day EMA is declining. And investors haven't been particularly keen on this acquisition. I didn't know whether Netflix really wanted this or whether they just wanted to appear to be in the game. So I know, I think I heard Paramount offered more for the company. So there could
They offered
be a little.
less. They offered less, but their approval process with the government would have been easier.
Yeah. Yeah, I thought they offered 30. So anyway, I think they're going to challenge this. So it'll be interesting to see how this moves forward. Looks like they're down today by about 0.75%. This will be their lowest price since the tariff announcements. They did get down, looks like about $85 a share back on the 7th. So they can't really say they're on a confirmed downtrend. They're 200 days still moving up, but if you drew a trend line on here, you could see that they are on a short-term downtrend at least. Like you said, they do tend to be overpriced at the moment.
And the stock's under pressure today, so if it goes down 4.75, which it's already, the market's already open, so
yep,
it's down 4.75, so that's gonna, add more to that downtrend. So, and I agree with you that Paramount will likely challenge this. I could totally see that they, work through legal channels to really challenge it and maybe make Warner Brothers go their way. I could see that. And that might slow things down for Netflix, but we'll see. So looks like Mike's on. Good to see you, Mike. I put both those stocks on the list.
We probably should take a look at Warner Brothers as well while we're here.
Yeah, let's do it.
Because before these acquisition talks began, they were trading around $12 a share. So they've just about doubled. They have over doubled since September the 9th. But this has been a painful one to be an owner of. I am an owner because I was a AT&T shareholder, so I got some shares from the spinoff. But anyway, I'm going to go ahead and hold those for now because it did the $23.50 cash price is about where Warner Brothers was trading yesterday, a little bit more maybe. I can see that they're trading up 3% today. In the pre-market, they were down slightly. So they're up to $25 a share. Part of the offer, the 27 something, $4.50 of that was would be applied to Netflix shares. So $23.50 was the cash price.
Correct. Yeah.
Okay. So Warner Brothers is, I think they'll probably float around here probably for the next year and a half or so until any legal battles that ensue are completed or they go through the regulatory process. It'll probably just hang around here for next year and a half or so. That's typically what happens of an acquired company. They just stay there.
Yeah. 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 So big deal on Wall Street. And the other thing I'll comment while we're talking about mergers is I think the level, the amount of mergers should increase. I think the number of mergers that happened for the last, 4 years, the previous 4 years, wasn't very high because the regulators would just like, they would fight it tooth and nail. There was an acquisition that they didn't allow. Adobe was going to acquire what is now, they went public. I forgot their name. And they blocked it. And Adobe had to pay $1 billion cancellation fee. And it just made no sense. It was like, okay, Adobe's not a monopoly. Yeah, they're the leader. But the previous regulators, as you look at these companies, they almost want everybody. They want, we don't want, one dominant company. We want 10 companies that are going to compete against one another because we think, like back in the 30s, 1930s, we think that's going to be good for the consumer. And, in some ways, maybe that healthy competition is good. But boy, Amazon's a pretty powerful company, and I really like the prices on Amazon. I really like the delivery convenience of Amazon, and I think the consumer is winning on that one. And who's losing on that is suppliers. Suppliers are like, man, in order for me to sell in the market now, I have to be at my lowest price and provide the most value to that consumer because they have so many good choices because now they're on Amazon. So I don't know what the regulators of the past would have said about that, but I think regulators think kind of like as if we were still in the 1930s where the monopolies did, back in the Rockefeller days. Yeah, Rockefeller did do some kind of some not good for the consumer practices. Agreed. But I don't think we see all that often now, but they tend to think that way. So now that we have regulators that are not going to block these, mergers and acquisitions, I think we're going to see more of them. Here's a big one, Netflix acquiring Warner Brothers. So we'll see how many more happen. And how can we make money? I think small caps that would be really good acquisitions. It's great to wake up like Warner Brothers. I'm sure you woke up and you're like, I own Warner Brothers shares, and you wake up, hey, Warner Brothers is going to be acquired. Boom. Your stock price just went up, 60% overnight. Hey, that's good. That's really good. So small caps, I think, will have that element of possibility that if you own a small cap and it gets acquired, you're going to have a big payoff. So, all right. So the stock market is trading higher this morning. That's good. Let's end the week on the positive note. That would be my vote. And when we look at the heat map, Nvidia's giving up a little bit of their gains. Broadcom is in rally mode. So is Google. These two have been kind of pairing up and rallying higher together. Meta is going higher. It had a good day yesterday, and it's going up higher today. I put Meta on the list. We can look at that a little bit later. We have Amazon going higher. It looks good. And let's see here. So down here, we've got, so AppLovin is down here. Very good. AppLovin's been rolling. They've been making a lot of money. CRM extending their rally from yesterday, and so is Adobe. I bought Adobe shares yesterday. All that positive software news. I bought Adobe shares, and I'm glad I did so. All right, so that's how things appear at the moment. We'll see if we can stick to that overall gain today. Now, a stock, let's move on to ALAB. I told myself on the last stream, before the last stream, I would really like to see Daryl's chart analysis on Astera Labs. Astera Labs has been a really fun stock to own. I've owned it. I started accumulating stock here. So it's fun when you make money, of course. But it's really peaked out. And what's going to happen next? I really want Daryl's opinion on that. This is a smaller semiconductor company, and their semiconductors are really a highly demanded product in data centers. They do communications, and they're very good at it. They are $25.7 billion. You are paying up for the stocks. Revenues are $723 million. So you're paying 40 times revenue or so. Yeah, about 35 times revenue for the company. That's an expensive ratio, but they're growing really fast, as I'll show. So it may be fine. Forward P is 70, expensive, but they're growing. So let's get to those numbers real quick. And these are the numbers that I wanted to highlight. Yeah, they're growing all right. They're growing, in this quarter, they grew 179% if you compare the same quarter for the year prior. 144, 149, 103. You can't find growth like this all that easy. It's very special. So they're growing, okay? They're potentially a super desirable business, but what would make them really desirable is if they made a lot of money. Bingo. Gross margin, 75%. Profit, and they're a relatively young company that is relatively small compared to like the Nvidias and Broadcoms. But look at that. They're already making money. And look at the expansion of profit. This is kind of like a mini Nvidia. This is a mini Nvidia that's kind of, it's almost like, in the ocean, you get these massive sharks or, whales, and especially the sharks. You see these little fish that kind of cling to those sharks. This Astera Labs is kind of like that. It's cling to Nvidia and goes up when Nvidia goes up. And this one here is nice and profitable. So super high growth, profit, cash flow. Okay, this company is very desirable. And investors are mixed. Some investors are like, this thing's going higher, much higher. And some analysts are, no, this stock's going lower, much lower. And on average, they think 15% discount. Who's right? Who's wrong? Now, I think this stock's a little expensive, but let's take a close look at their forecast. We are operating in this year. So we are here. So next year, 2026, they're going to grow by 44%. Very good growth. And their P ratio is going to drop to 65. And then they're going to grow by a 35. P ratio dropping to 47, 31, 32. And then they're going to kind of hit a wall out here. Now that's 3-4 years away. And for all we know, they're going to get some other product going. We don't know. The other thing that could happen is these guys could be acquired. They have a special semiconductor, and Broadcom can acquire them. Nvidia could acquire them. Somebody that's bigger could acquire these guys because these guys are growing. So these numbers look good. Looking at the quarterly, we just finished this quarter. They grew at 103%. Now, the quarter that we are in, they're supposed to grow at 80% and really keep growing quarter after quarter. So let me show you my valuation of the company. I've been tracking Astera Labs. And FYI, I got to thank the live streams for Astera Labs and the money I've made on Astera Labs, because this stock idea came out of a live stream. One of you guys, one of you investors said, hey, what about Astera Labs? We started looking at it when it was priced too high, and then it came down. We kept looking at it, and then boom, seized the moment. I think Astera Labs is priced 21% too high, and I'm a buyer all day long at $120 a share. So we're not there. I don't know if we're going to get there, but that's where my head's at on Astera Labs. Now let me turn it over to Daryl and just listen to what he has to say about this stock.
So previously, when we looked at this, when we put this support resistance line right where my cursor is sitting, we put it at the high that they saw on January the 25th. Looks like they've been in existence since the March of 2024. So that's why that particular line is there. You can see that they broke above that line, got up to a high of 262. That's why this dotted line is here. That's just the high and will be a point of resistance at some point. We also have this downtrend line that's connecting to this high, this high, this high, and doesn't look like it's connected here. But let me step down to maybe 3 months right here so we can look at the details here. So they do have a 200-day that is moving upward. They would have to break down below that 200-day to get to the 120 price that you just mentioned, Victor. They do have that's still upward trending, by the way. So even though they're on a small downtrend here, overall they're still moving higher. The 50-day rolled over probably about October, leveled out for a while, and then went on another downtrend. Looks like it's leveling out about right here. The price today went up intraday and touched this downtrend line and has since pulled back slightly. And that's why I like to look at these downtrend lines, because they do serve as resistance at some points. So now I'm going to go to 1 year. I can see that the RSI hasn't been above 60 since September the 23rd, shortly after their high here. So it's come down and broke down below the 40 line. It hasn't gotten to an oversold condition. So that's somewhat good news. I would have liked to have seen it stay above 40, but it is what it is. It did cross above the 40 line, came down and tested it again here, and that was on a huge volume day and a price decline of 13%, and they still maintained an RSI of 40, and they are making their way back up, and they're sitting right at the 50. Well, now slightly below the 50. They did have a bullish crossover about a week or so ago. It is in bearish territory. And the money flow is negative right now. The accumulation line is actually in distribution. A little bit of accumulation today. So it looks like it's going to battle this downtrend line for a while, but it did maintain this support at around 140, 144 or so. It dropped down to 135. I think if it gets anywhere near 135 again, it would definitely be a thing about getting back into this one or increasing your share count.
So that downtrend is what had me a little worried. I'm like, why are we establishing lower highs, which is the line you have there? So you're saying 135 would be...
Yeah, the 200-day is still increasing at the moment.
Yeah,
so
understood.
Overall, they're in an uptrend, even though they're down right now. They just got overpriced here. Basically, they were 150% above the 200-day moving average. That's not a good recipe.
Okay. Good stuff. Yeah, thanks, Daryl. It's exactly what I wanted to learn today.
Right now they're only about 25% above their 200-day. And they have tested the 200-day. They tested it in July This doesn't really count because it was all the tariff stuff. They broke down below the 200 in February. Then we had the tariff announcements, but they quickly recovered above the 200 and have tested it 2 times since.
Okay. Very good. Awesome. Thank you, sir. All right. So we've got some requests. The first one we'll get to is DocuSign. We're seeing a lot of pressure on DocuSign. It's down 7.2%. They announced earnings yesterday. I read the earnings. The earnings were good. Now, they weren't great. They weren't like, hey, we surprised the market and grew a lot more, or we were much more profitable. They came just slightly above what was expected, and that wasn't enough for the market to get excited. DocuSign is kind of a slow growth, and it's not slow growth like 1 or 2%. It's like 8, 9. And that's where they're at. I also think that DocuSign is a single solution company. They do digital signature capture software. It's good. It's the dominant, more popular tool out there. That's all they do. They don't do anything else. I think merging with another company might make a lot of sense. Maybe a Zoom and DocuSign got together, or if DocuSign gets acquired by somebody, like a Salesforce acquired DocuSign or some other bigger entity acquired DocuSign, that might be better for the product overall, because you can only survive so long as an independent without growing. You have to keep growing. If you don't grow while other companies are just growing really fast, it's not going to end well. That just means you're not that relevant, and the market's going to forget about you. Now, this stock is a $13.27 billion market cap. Forward P is only 16.5, and I'll show you that they are growing. Analysts think there's a big discount available. So these guys, they're discounted across the board according to 14 analysts, and they're just going to keep growing. Now, I do see that this year, which is next year, there's supposed to be some type of slowdown, but I don't understand why. I think they're going to just keep growing. Their growth was 8.42%. The quarter that we are in is supposed to grow at 8.65. So the growth looks good for the next 3 quarters. And the market just wasn't excited about the company. And I can understand why. It's kind of getting a little boring to see DocuSign announce. But look at that. The stock is coming back. Better hurry up and buy shares. So DocuSign is a stock that I have nicely discounted. 54%. I'm sitting on a gain. Buying at the right time is key. Right now, it's not a bad time from a fundamental perspective. And I'd rather let Daryl kind of comment, and then maybe at that point I could come back, and then maybe at that point I'd be like, yeah, seems like a good time for me to buy shares or not buy shares. I'll wait a little bit. But if you look at the fundamentals, this thing is highly discounted, which is why it would make a sense for another company to acquire them. Like, just acquire DocuSign, you've added to your revenue. You might add to, your product overall, like a Salesforce, right? It makes a lot of sense. Probably all Salesforce customers use this already, or Microsoft. Totally makes sense. What do you think of DocuSign, Daryl?
Well, today was a good opportunity to buy. And the reason I say that is it is hitting support. It was established way back in October of last year at this gap. And they came down and tested it in November of this year. And then they're testing it again. And we can see that buyers are quickly stepping back in and driving this price higher. So that's a really good support line. They are on a downtrend. I think this company is going to do much better as we start seeing the mortgage rates come down and refinancing starts. You're going to see this company do pretty well. Another company in very similar circumstances is Rocket Mortgages. They're actually not doing too bad right now, but every time the mortgage rates drop, their price skyrockets. And I think this one will do pretty much the same. So anyway, a good buy price today. The 200-day is declining. The 50 days declining. The 21 days started improving, moving into earnings. I think I was asked about this yesterday before their earnings, and I said it was showing some strength going into the earnings. The reason I said that is we had a positive RSI in bullish territory. It was about 58. I can see it's pulling back to about 42 right now. It'd be great to see it hold this 40 RSI. Another reason I said they were showing a little bit of strength going into the earnings is they had a bullish crossover. Now, the PPO was in negative territory, but they did have a bullish crossover. So to me, this looks like a pretty good buy price right here. It's at good support. Trying to see where they might. If you do buy it here and it's a new position, they do have additional support at around 59. That might be a good place if it does fall and breaks down through here and hits this next support line. If it gets down to there, I don't know, you'd be down about 10%. I don't know if you'd want to exit out at that point, but to me, this just looks like a pretty good support.
Okay. All right. So I think I'm going to be in a buying mood for DocuSign. So thanks, Daryl. So Mike, there's DocuSign. Oh, look at that. Mike's already on top of his game. Added more DocuSign to the portfolio. I think it's a pretty attractive price. And usually when you see these kind of sell-offs, the next day it pops back, or the next trading day, because tomorrow's Saturday, it usually pops back up. So the other one that we're going to look at, that Mike wanted to look at, is SentinalOne. It's a cybersecurity company. They're one of the smaller ones. Whew. Now, this one worried me in the past, and I'll go into what worried me. $5 billion market cap. So this is one of the smaller ones. And revenues just a little under $1 billion a year. Forward P is 55. Analysts do see a big discount. 46% drawdown over the 1 year. Man, that's a rough one. We've gone over this one in the past. Now, cybersecurity stocks, we've got a good selection of them. We got like 10 of them. CrowdStrike. You got Zscaler. You got Fortinet. You got Palo Alto, SentinalOne. Yesterday, we looked at one that did rally, and it was Rubrik. Rubrik was rallying higher. So let's take a look at SentinalOne, see what we're faced with. So it looks like their revenue did grow nicely, 22.9. So they're not the biggest software company we're going to find in this space, and 22% growth, 23% is not exciting for a company this small. But it's good growth, right? And I'm going to look at what was forecasted in a bit. Profit. So the profit, I think, looks good. Profit margins. Gross margin, 75%. That's good. But look at this here. Why are you not getting more profitable, SentinalOne? And you know what? I am not sharing my screen. Sorry about that, guys. Now you can see my screen. Sorry about that. But so just to recap, since I didn't have you guys on the screen, I think this piece was fine. Their growth for the quarter was 23%, and now I'm into the margins. And I'm seeing that one thing that investors may not have liked is you have a very good gross margin number. That's good. And it's expanding. That's good. What's not good is your profits also supposed to expand. Now, they were in heavy losses about a year ago, about 2 years ago, excuse me. And they started to make progress on a path towards profitability, and then they had a step back. That's really bad profitability. That they're losing a lot of money, and their loss of money is just really high. Their cash flow is okay. It's not good. 7% is not good. It's like, okay, you're showing a sign of life when it comes to cash flow. But these numbers, I think, are what trouble me about the stock. That's what I've been worried about for a year when it comes to SentinelOne. I don't own SentinelOne. I've never owned SentinelOne, but those are the numbers that scared me off. Because, in addition to, I have other choices in the space. I bought Zscaler in 23, 24, made money, and now I'm in Fortinet. Fortinet has, I think, numbers that are terrific, and it's sold off and it's discounted. So SentinelOne scared me off because of these numbers. Forecast. So analysts are pretty high on this stock. They think these guys could really make it happen. And if they showed a bigger growth number here, I'd also be probably in the excited camp, but they are small, okay? They're quite a bit smaller than CrowdStrike, Zscaler, Palo Alto, and they're growing at, for the year we're in, 24%, moving down to 21, 18. So this is good, but it's not great. And they are supposed to get to profitability at some point. Okay, so that's good to bring down their PE ratio, but you have to wait 3 years to get the PE ratio into the 20s. There's just a lot to, I think this is a riskier stock than one of the better names, one of the better known names, I should say, and not an investment that I was comfortable with. And at this point, again, compared to other options out there, I don't think this one ranks near the top. It actually ranks near the bottom. What are your thoughts on SentinelOne? And when I come back to my screen, I'll share my valuation that I'm going to update at this point.
Okay. So they IPO'd in 2021. I have this one support line here where they touched it twice in 2022 and then in 2023, and that's at about 1289 or so. I'm going to actually remove that one because once I go to a 1 year chart, it doesn't show up any longer. So you have support at around 1289, and then we'll move in just a little bit. I have this support line, a little more near term. It was at 1438 or so, and then there was a support line here that it was tested here. Here I could actually draw that back all the way to here. So that would be tested 3 times, and today they're falling below that. They are getting buyers in today. They fell down to 1450 in early trading, and it looks like buyers are running the price up, but it's still at the mid point of the range throughout the day. Let's step in just a little bit more. We do have this downtrend line connected to a couple points. I'd really, before I got too terribly interested, I would love to see it break out above here to see that it's going to maybe sustain any move, because they're not sustaining moves right now. The RSI is moving down towards oversold territory. They're trying to have a bearish crossover in bearish territory right now. And we're looking at a 1-year chart, and it's about decumulation, or a distribution is about a 52-week high. Let me go back maybe a couple years. It's at a 2-year low. Distribution is at a high. 3-year, they have a accumulation about where they were 3 years or so ago. You did have a peak in about May of this year. So anyway, this one doesn't look too promising to me. It's definitely got to some work to do, and moving down today to at least a 1-year low is not good.
Yeah, thanks, Daryl. And I think we agree on this one. And I did the initial assessment on SentinalOne, and the best valuation, because their free cash flow is really for the trailing 12 months, is 68 million, rounding up to 70 million. If I go 40 times that number, I only get to 2.8 billion. And that's well low their current market cap. So I can't value the company up to their current market cap. And I think that's what's ailing the stock, is their fundamentals just can't, it doesn't add up to the market cap. And their revenue growth is not all that exciting. You can get into a bigger company that has a bigger revenue stream that's growing at a faster rate. That's not good for SentinalOne. It's more comfortable, lower risk for investors to buy a better known name with higher growth rates that has a higher overall market share. So SentinalOne, it doesn't rank near the top. It actually ranks near the bottom on the cybersecurity stocks that I like. Out of curiosity, I'll tell you the one that I'm buying is Fortinet. And it is going higher today. It is not a perfect situation for them. They sold off. I think I'm sitting on a small gain, but I think this one is discounted nicely. And let's take a look at their financials just real quick. These guys are bigger. They're growing at 12% for the annual. Let's look at the quarter. They're growing by 14% in the last quarter, and they're much larger than SentinalOne. So they're adding a lot more revenue there. I think this is a good one. And I'm buying more shares into it on good pullbacks, but it looks like it's going up a little bit today. All right, let's take a peek at the stock market and see what's going on. And then we'll get back into looking at stocks. If you're on the stream and you'd like us to look at a stock, put it in the chat. If you're a member, no additional fee beyond your membership. If you're not a member, just pay us a $5 super chat, and then we're off to the races on the stock that you want us to look at. Looks like the semiconductor space, aside from Nvidia, is going higher. Intel. See, this is what I was talking about early in the stream. Intel earlier in the week had a real bad day, like down 7%. Now it's up 5%. So it's back and forth. Broadcom's up nicely. Google's up. Palantir's higher. Look at CRM. Go CRM. Keep going higher, CRM. Adobe. Oh man, I should start day trading. I think that would have been a good day trade right there. But having a little fun here. Bought some Adobe shares yesterday. I already owned Adobe, but I bought a good number of shares yesterday on all the good news that I was seeing in software. Meta's higher, telecom's higher. Looks like Walmart. Man, Walmart just keeps going higher. I think it's an expensive stock, but the market thinks it's a good investment. They keep buying it up. Amazon's a little higher. Looks like healthcare is okay. Some green and some red mixed together. Energy's had a decent week. Oil prices have gone higher, giving these oil companies an opportunity to go higher. So that's what's going on. And when we look at the overall index, we've got the S&P up 0.49. That's not bad. NASDAQ's up 0.62. The Russell is taking a break. One thing this week, small caps did outperform big caps in previous trading sessions. So I did notice that because on some days, the S&P was just slightly higher, but the Russell was up more than 1%. So small caps showed up this week. All right, so doesn't look like we have any new chat messages. So let's move on to Meta. I think that was a good stock to look at. Meta is up a little bit. Looking at the 1 month, this stock really provided a nice little opportunity. When you look at the sell-off that started right around their earnings, it really sold off hard, but it's really recovering fast. And the news story that, hey, they're going to slow their spend in the data center and related to the metaverse. Cool. That's very good. Market's up 2 consecutive days on the news. So that's good. And market cap, 1.67 trillion. PE ratio is going to be 22.48. Analysts think it's discounted. What's impressive about Meta, we saw SentinalOne, right? They're less than $1 billion in revenue, where Meta's $200 billion in revenue, and they're growing at 26%, faster than SentinalOne, way faster, right? When you're adding 26% top line revenue on a $200 billion number, that's $50 billion of revenue that you're popping on that top line. And Meta is really profitable. So when they add that revenue to the top line, they get to make a lot of money. They get to get margins of 82%, profitability of 31%, and really good free cash flow, which is going to improve now that they're going to stop spending so much money on the idea of the metaverse and AI. So this is a terrific business. And if the market wants to give me a discount, I will take it. I bought more Meta recently and bought at the right times. And it's the second biggest position. Number one is Google. Meta was my number one position for over a year. Now Google's risen to that spot. I have a good concentrated investment in Meta. I think it's over 10% of my portfolio is in Meta stock, and I'm comfortable. I think it's going to go higher. I think it's going to go up to $1,000 a share, maybe by the end of 26 or maybe in 2027. But I think that's where it's going. What are analysts thinking? Analysts are 43 of them cover the stock. They think it's discounted by 23%. And when we look at the forecast for Meta, they're growing nicely this year. They're going to grow nicely next year and just keep growing, make themselves more than $300 billion in revenue. And I showed you their profitability ratios and their free cash flow ratios. On this number, they're going to generate about $75 billion of free cash flow. That's a lot of free cash flow. That's like Apple. That's like Apple-like free cash flow. And their PE ratio, if the stock were to stay at the same price, their fundamental value or their fundamental weight would bring that PE ratio down to 18. but I don't think that's going to happen. I think the stock price is going to rise. And even if it rises, you can still stay in the mid 20s with Meta and have a fairly valued and actually a well valued stock showing a discount. And you still have a P ratio in the 20s, as opposed to some investments, man, you got to get into P ratios that are really high. And it seems like a lot of things can go wrong with that stock. I think the stock's discounted by 25%. And if they can keep growing, I think their valuation is going to keep getting bigger. And that's where I'm at with Meta. If it has any pullbacks, I'd be buying. But let's turn it over to Daryl to take a look at the charts on Meta.
So I also bought here as well. I wasn't a Meta share owner before, but could not resist this pullback. And I also traded options 2 times over the last week. So I bought a December 19th put option, or a call option. I don't do that very often. I usually don't buy options, but I did in this case because I thought they were going to do pretty well. 2 days later, they had a pretty good pop, and I closed it out on a Friday. Didn't want to hold a short dated option over the weekend. So I made a couple $100 there, and then I opened up a January call here. I bought at about 645, I think was my target price. So right at the money. Then yesterday we had that big pop, so that was a $1,300 profit on that in just a couple of days. So that one's closed out. Monday I'll be looking at these again, but I'll tell you what I'm watching. We do have a 21-day that is increasing, a 5-day that is increasing. 200-day has pulled back, and I'm going to zoom in here just a little bit so you guys can see this a little better. Look at where the price stopped yesterday. A confluence of 2 resistance points, the 50-day and the gap resistance on the 30th of October. It went almost to the penny to those 2 resistance points and then sold off pretty much throughout the day. Today we're opening a bit higher. It really needs to break above this point. I don't know if it's going to do it today, but Monday and Tuesday I'll be watching this. If it ever makes a move above this line, I will be buying either a January or a February at the money call option. Because let me go back out to a year. They have an intrinsic value. I don't know what you have, Victor. I think I have a value of about 820.
Yeah, I'm at 880.
They are you have 880, so they're underpriced to my price of 22%. There is quite a bit of resistance. They need to work through, maintain this 200-day and break above the 50 and this gap support. If they do that, I think they can run up to 735, and then they're going to be meeting resistance at this high here, and they have resistance point there and another one here, and then their intrinsic value, but they're way below their intrinsic value, and I think the price will go up over time. So by doing those options, it actually lowered my cost per share from the 600s where I bought them at to in the 240s, $240. So that was really reduced the risk on my Meta shares. They are coming up to the last 2 times that they've tried to push to highs. They couldn't get above an RSI of 60. Look where they're coming up to right now. If they hit that 60, they could have a small drift sideways or a small pullback. If they can break above 60, then there's a good chance that they'll run up to relative strength of 70, which could happen towards the end of this month. We got to get through this week. Oh, we're almost through this week, but next week as well. And then I think there'll be a general trend higher. So if you're into options, there's some opportunities here. You just have to look for a good entry point. If you think it's going higher, which I do, and I don't recommend buying options unless you're really watching the price. Don't do it if you don't have a pretty strong feeling one way or the other on a stock.
All right. Very good, sir. Thank you. And I put in my buy orders on these stocks today. I bought DOCU, eToro, Nvidia, and New Holdings. So that was for Magical Self, who was asking. All right. So what's this market doing? What is this market up to? Is it going to go higher? I hope so. Yeah, we're sitting in a good spot. It's less than an hour of trading. Market's gone higher. I haven't seen any other big headlines other than Netflix acquiring Warner Brothers. All right. And looking at what's crypto doing today. It's down a little bit. Interesting. All right. So, man, Meta's really going higher. Nice. Let's keep analyzing Meta because it keeps going higher. Google's going higher. Man, look at this space here, Daryl. That looks good.
Yep.
That looks really good. And, you know, I've been watching this space because the discounts are really good on software. And the other things that I like are like their profitability and their free cash flow generation. And a lot of these companies have really strong moats, like Salesforce is an example. The changeover costs, and I would say the difficulty to change over for a business. Businesses use Salesforce for their sales, operations, marketing, and service. And those are pretty much, you know, they set up the business flows, the workflows for that company. If they decided, no, we want to move off Salesforce and move on to something else, it's very expensive and difficult. So Salesforce kind of has a very strong, or I would say a pretty good grasp on their market share. That market share isn't going to go anywhere. I like that. And I think Adobe has a similar, you know, when you have these creative people that have been working with Adobe products for 20 years, 15 years, maybe they went to college and were taught on Adobe products to be great creative people. They don't want to change over and use another product. No, it's a little cheaper. I don't care. I've got so much, you know, equity in that platform. I'm going to stick around. So it looks like the space may be beginning to rally higher. And this is a place I intend on making money. I own a good number of stocks in software. I already know where I want to buy, and I'm going to keep buying into it. So software space is going higher. I want to go higher with it. Looks like we've got some guys showing up to the stream. Good to see you, DJ. Man, you come to the night streams, the day streams. Thank you, sir.
Everything in between streams.
Yeah. If I ever have such a stream. So, Uber. Let's talk Uber. I'm always in the mood to talk about Uber. Up 1.5. What's this stock been doing? Look at that. Look at that. Beautiful sell-off after their good earnings. That gave me an opportunity to buy more shares. Why is the market this nice to me? why does it give me these discounts on these awesome businesses? I guess I did a couple good things this year. Santa Claus showed up a little early, said, here is your gift in the form of a good price on Uber. So what's a good entry point for Uber? Oh, man. All right. So that's the question we're going to try to answer. For DJ, let's take a look here. Market cap, 192 billion. P ratio for 26, 27.25. And analysts think it's discounted. All right. So these guys are growing, and they're not going to stop growing. The world is hooked on mobility on Uber. They're hooked on delivery of food from Uber. They're just hooked on this convenience. And FYI, you can make a financial case for getting rid of your car and going all in on mobility on Uber, food delivery. I know the numbers. Okay. I've especially seen young people that I know well. They're like, no cars. I don't have a car. That's silly to spend that kind of money. Now they live in cities. It's not like they live out in the country and they have to ride their e-bike, 50 miles to get anywhere. They're in the city, so they can walk across the street and get a bite to eat and walk 2 blocks to the subway kind of situation. So yeah, they have a different situation, and that really helps Uber because that consumer is now putting some of their spend that would have been spent on transportation on Uber. And I think that's growing. And you see e-bikes everywhere. I don't know. Do you see e-bikes where you live, Daryl?
I live in Arkansas out in the boonies, so the answer is I see 0.
Yeah. So out in the boonies, totally understand. I live in the Los Angeles area. They're everywhere. It's like, man. And when I was in Mexico City, geez, in New York City, e-bikes everywhere. And it's kind of a little scary because if you walk in New York City in Manhattan, you got to be careful because those e-bikes weigh like 50, 60 pounds. And then they have somebody on them that weighs maybe 200 pounds. And then he's carrying a bunch of stuff. Maybe he's carrying 30, 40 pounds of stuff he's delivering. So you have an object coming at you collectively that weighs 300 pounds going 20, 25 miles an hour at you. So you don't want to be hit by those guys. So back to Uber. So Uber is growing, and my expectation is they're going to keep growing because the world is learning how to use Uber more often. They're changing lifestyles to make themselves better Uber customers, not necessarily for the benefit of Uber, but because they think it's a better lifestyle. And the forecast for Uber looks good. With growth 20% in the year we're in, 16, 14.5, and then 11. I think they're going to outperform that forecast. All right, so let me get my thinking hat on and deliver a comment that I think, based on my research, I'd want. So I think Uber is just a fantastic company. What's the right entry price? So Uber is a big position in my portfolio. It's either number 4 or number 5. It's got 6-7% weight of my portfolio, which is a pretty big position. If I did not own Uber, I would be buying Uber. I'm a dollar cost average investor. I would be buying it, and then buying it after that until I had a big pile of Uber shares. I'm building a bigger pile of Amazon. I already have a gigantic pile of Amazon, and I have a gigantic pile of Meta. Uber needs to be a big pile in my portfolio. So my approach would be, I'm not looking for a perfect price. I already know I'm getting a great business at a discounted price. So how can I put capital into Uber? Is my mentality. Not the question you asked, but that's how I would respond, DJ. That's what I'm doing. And I hope you find that interesting. Let me turn it over to my colleague because he might have something else to say. And he could look at the charts. We could see what he's seen on the charts.
So I've doubled my position in Uber over the last month. We have a long-term support resistance line here that has been tested twice, 3 times. They broke out above it, and it's held as support since May. We also have a trend line. It goes all the way back to 2022. That's a long time trend line. It's been tested once, broke down below here, tested it there, and it broke down below it just recently. But that's a 5, or well, not quite 5 years, 3-year trend line. So let's go back to a year. So this was a point of caution, but Uber has such a good valuation that I didn't really think it was too much risk here, and I did see this support line here. So I doubled my position in Uber in through here. They have now recovered that trend line. So today would be a good entry point. They are facing resistance. They will face resistance at the 50-day, which is declining. The 200-day is still increasing. The 21-day is increasing. And 3 days ago, they have held above that 21-day moving average. So if you weren't buying it here, today is a good time to get into Uber, in my opinion.
Well, I think
They are the RSI is above 50, and they did have a bullish crossover in bearish territory. So I don't think you can beat this. If you don't own any, I would be picking it up.
Well, DJ, you asked and you've got comments. It is great to have you as a member, sir. Thank you very much for the question. And thank you for coming back over and over again, adding to the conversation. In Magical Self, I invested in GMAB on Tuesday. Thank you to this community of investors who brought this stock up. And I know some other investors made money on this puppy. And it's a biotech company doing great. And I started buying it on Tuesday. All right, Bo, thank you, sir, for the super chat. I think this is Let's Do Life 360. Do you know, son, what's... Okay, so which stock are we talking about, Bo? I want to make sure I handle your question right. So I'll look for the comments here.
There is Life 360. LIF is the symbol.
Okay. Okay. Thanks, Daryl. What's the symbol?
LIF. Lima, Indio, Foxtrot.
Sorry, go through that again.
Lima, Indio, Foxtrot.
So just Life 360. Got it. Okay. So, all right. Let's do Life 360. Do they have a moat? How do you DCA when the stock passes your average cost? Okay. So let's take a look at the company and see what the company looks like. And do they have a moat? All right. So just to get my head around this business, let's look at their website. and start with that. So Life 360. So my wife is a customer just out of the gate, and we have 2 sons, and they don't like it. But
Yeah.
when our sons travel abroad, she was like, "You got to have this, man, because she'll have sleepless nights if they don't." And I have to admit, it really worked. We have sons that traveled abroad. They travel all over the country, and moms, they care about their kids. So my wife is all in on this, like, for kids, right? And it's pretty cool because you might even be able to use this for. I'm sure companies have access to other means of tracking, but you could track easily if you're a delivery company. You can track where your assets are, your drivers and so forth. So that's what these guys do. I forgot how much the monthly subscription is, if it's 10, 20, or $30. And they're building up a little business here. We're going to see. So here we go. So silver. Okay. 80 million people love it. Which kid wouldn't want to be tracked by their parents, right? Don't ask kids, because they're not paying for the membership. It's the parents that are paying for it. And you think about, like, and I could speak for myself. When I grew up, I was like 11, 12 years old. My buddies in the neighborhood, we'd get on the, I live in Southern California. We'd get on the bus in the summertime. We'd have fishing poles or boogie boards, and we'd go to the beach. We'd spend the day at the beach, just kids, 11, 12-year-olds. Then we'd get back on the public bus and we'd drive home. It's probably like, I'm going to call it a 15-mile ride from where I live to the actual shoreline. My mom didn't think twice. She's like, "Yeah, man, have fun." Nowadays, that would never happen. We're so freaked out because we have all this information. And here's one more way that we get to keep track of the people we care about. But it's a better world. In case your kids need you, you know exactly where they are. Because on one occasion, we were at the beach, and there was a big surfing contest going on, and a big riot broke out, and they canceled public bus service. So we were like stuck in the middle of a riot. That was fun. Growing up in Southern California. All right, so Life 360. So we know what they do, and where are they headquartered? San Mateo, up in the Bay of California. Okay. $6 billion market cap. PE ratios are really high. They better be growing, because these are really high PE ratios. Prices, analysts think 9% discount. Stock for the 1 year, it's been doing well. Really, really good. Looks good. Growth. So this is an underwhelming number. If you show me that PE ratio and then you show me 22%, I'm like, that's not good enough. They are accelerating their growth. That does look good. Okay. This looks really good. This means that customers like the service. They're buying the service again. Maybe they're telling friends about it, and those friends are logging into the service. They like, they're getting more customers organically. That's what it shows. That is a positive number. Let's keep looking. So I like the growth. Initially, I was a little mixed that the P ratio is so high and the growth rate wasn't really good. The gross margin looks good. 77.7% is excellent. Profit margin looks good. Looks like it's getting better. And the free cash flow margin looks good. Okay. We have 6 analysts covering them. They think on average they're discounted a little bit. It's expected that they're going to keep growing. They're a little small, but they're going to keep growing. Right now, this year they're growing at 31%, 28%, 21, and 14. Okay. All right. So the one thing I sense is these guys are doing one thing, right? And maybe they can broaden what they, and hopefully they can broaden the products that they sell so they can become bigger over a long period of time. Do they have a moat? So far, I think they've differentiated well. They've met the consumer, the customer, somewhere where that customer really values their service. Okay. And they're meeting the customer where, it really counts, right? Probably a lot of moms that have kids and they're like, hey, I want to have this because I want to know where my kids are. They're really the most important thing in my life. And I want to know where they're at. And these kids are probably like, oh man, my parents, they pay for my mobile phone. They're solid parents. I guess I'm going to go along with this. And they get tracked by their parents. So I think they are establishing a niche and they are making themselves different. I don't think any other big company is going to go after them. Like, I don't think Facebook is dying to get their $459 million of revenue. They're like, we're a $200 billion outfit. We're not going to spend time going after these guys. Now, as they get bigger, they're going to become a bigger target. And my biggest concern with them, I think they do have a moat. I think they have a niche. Okay. But my biggest concern is how are they going to go and become a $10 billion revenue company? How's that going to happen? I'm not seeing how they're going to be able to do it unless they expand into other products. Like right now they do, tracking of loved ones. Is that going to extend into other things that would enable you to get value without, kind of trying to go into Instagram's kind of turf, because you get that for free. Why would you pay for something that you get for free? Or you get like WhatsApp is also really useful and that's free. So it's really hard to compete against free. So those are initial comments there on the moat. Now let me kick it over to Daryl and I'll work on a valuation on this guy. And then when we come back to my screen, I'll show you what I've come up with on a value.
So I see another question. Doesn't Apple have Find Friends? Yes, they have that. And I can track all of my devices. So whether it's my AirPods, my iPad, my laptop, my wife's phone, my wife's earpods, I can track all that on my phone. If my kids, which are adults, older than most of you that are probably listening, if they gave me permission to track their phones, I could track their phones. So Apple's had that built in for a long time. So I think the moat here is probably not very large unless they really differentiate themselves. Now let's take a look at the price action. So this, they were on a really good rise here, but I'm going to show you something that should have been a point of caution about this point. So we see the price rise. Notice the RSI, and we've talked about this with other stocks as well. And stocks can continue to go up when this happens, but eventually they have to pay the piper most of the time. So here we got to a fairly high price level on good momentum. Then we rose to a new price level, but notice that the RSI right here was less than the RSI in the previous uptrend. And we got to a new high. notice that the RSI is less than the previous uptrend. Here we got to about the same level as here, but these two times were not the same levels as these previous two times, yet the price was still going up. That's always a cautionary tale, and you got to start watching because it's going to pull back at some point. And then finally it broke down below the 60, below the 50, below the 40, and went all the way to 30 in a really short period of time. It tried to recover, got above 50 for a day or two, and immediately started downtrending again. So there was some signals that this was not over yet, and it still may not be over. We came down and tested the 40. We'll have to see if we can get above about 45, and it has got to get above 50 and stay above 50, or you may see more downward price pressure here. We do have a bullish crossover in bearish territory. We're in distribution at the moment. Money flows have been negative with the exception of 1 week. We've been negative since the 19th of September. The 50-day is declining. The 21-day is declining. The 200-day is still upward sloping. And it was tested here, and it did maintain that. So if it pulls back again, hopefully it maintains that 200-day moving average. If it breaks down below it, then your next really support levels are down around $47 or so. That's my thoughts on the chart.
Very good. So I'm putting the finishing touches on the valuation. So let me go ahead and share my screen. And so the earnings per share expected for 2026 is 59 cents per share. They're growing it quite nicely the following year. But it's just this stock's gotten way ahead of its valuation. I'm looking at their, trailing 12 months free cash flow figure. I'm growing it by 25%, which is rational. Even if I increase that to 35%, we can't get to their valuation. 35% would be quite good. Probably a little too good for them. So this one here would be a pass for me. It's just too expensive. And I'm glad that Daryl mentioned that, Apple does have the means to track devices, which this is what they're doing. The company is tracking people by using their mobile device. Well, you can get there if you just probably create the solution yourself. They've built a pretty strong, customer base, which is good. And they're really selling to what I think is a very important emotional kind of condition of parents, right? They want to track their kids. So that's been pretty smart on their behalf, but it's just a stock that doesn't offer me a lot of upside. It just offers me potential downside. If they're a huge success, I don't know that they're going to be a huge success because I don't think they have the addressable market to be a huge success. It's going to be a while before they get above their intrinsic value. So this one would be a pass for me. All right. Let me double check to see if Bo has any other questions on that.
He did have about DCA.
Well, I wouldn't buy this stock, but how would I DCA? I like to DCA.
He was specifically talking about Uber. He's got an average price target at 86. How does he DCA into it now without rising his raising his price level up too much.
Well, okay. I don't really care about my average, cost. What I care about is Uber becoming more valuable, and how could I get a bigger share of Uber? So it's not something that comes into my, thought process. My thought process is Uber getting more valuable, and I want to buy more shares, and I'm looking for opportunities where the market sells it off, buy. Okay, great. Market's really doubting Uber, great. And that happens from time to time. And they could thank Tesla for some of that, because Tesla is like, when they come out with robotaxi news, like, Elon Musk is like, man, this is how we're going to do $1 trillion of revenue with robotaxi. And boom, the market buys up Tesla stock. And they're like, oh man, sorry, Uber, you're going to be put out of business by a company who really isn't operational with their robotaxi business just yet. They're doing test rides in Austin, but it's not readily available to anyone. So it's a company that's really putting out ideas, but I don't know that those ideas are threats quite yet for our friends over at Uber. But when those stories come out, the market sells off Uber. Well, thank you, stock market. I will buy Uber stock on days like that, because it's an opportunity on days like that. And those days will come on Uber.
Yeah, I appreciate what you're saying there, because I see this comment all the time in the Discords. And I can tell you on NVIDIA, if you want to show my screen for a moment, I was buying back here at, let's see, $49 on NVIDIA. It doubled in price, and I was still buying. I didn't care if my average price went up or not. If I had been concerned about that, and this kept me from buying additional shares, even at an all-time high, I started adding again in here, and I would have missed out on a lot of
Correct.
price action. So that's a really good point that Victor made. Don't let that influence you too much. Uber is worth a lot more than what they're trading for at the moment. Nvidia is seen to be priced fairly, and they're not far from all-time highs. So if you let that sway you, then it's going to prevent you from buying price and taking advantage of appreciating prices. So I agree with what you're saying, Victor.
Yeah. And, if you look at this chart, right? And every time Nvidia has announced earnings, it gives us more information. And it gives us, it's almost like, I think we've all assembled a puzzle, right? It's fun to assemble a puzzle. And early on, you take the darn thing out of the box, and it's supposed to look like it's 500 pieces, and it's supposed to look like that. But you have all these pieces on the table, and you're like, well, it's not looking like the picture on the box just yet. And you put a couple pieces together, and you're beginning to see it. Tiny pieces of it get put together. Each earnings report is almost like, of the 500 piece puzzle, it gives you like 50 new pieces that are assembled, and the picture begins to get completed. And the picture on Nvidia, every earnings report got better, got more incredible, substantiated a lot of theories that were like, hey, these guys are going to be yay big. Well, each earnings report was like, yep, they're going to be yay big. Actually, they're going to be double yay big. And when we get to a point of they're going to be double yay big, the valuation goes up. So what was an average price 6 months ago is no longer relevant data. What we're looking at now of the Nvidia that is now this scale, growing at this rate with this kind of cash flow. That's the relevant data. So it's almost like the rear view mirror is useful in a way, but not a predictor of the future, and especially valuations. We can't hang on to like the value for Nvidia has evolved over the last 4 years quite drastically, and the value of stocks will evolve. Google, Microsoft, all these stocks, their valuations evolve, and so their stock prices. All right, so good conversation piece there. Looks like Kevin is on, and yeah, Reddit is rolling. Keep rolling, Reddit. I keep buying shares. Good growth, fantastic stock. Keep going higher. All right, so Mark, Daryl, what's the best entry point for SentinalOne?
We talked about that earlier, but we can take a look at the chart again if you want to spend a little more time on it.
And maybe you can hit it real quick.
So they're down today, and there were buyers that stepped in. But they have support down at around 1426. So I don't know how sold you are on owning this one. They're in a downtrend, a confirmed downtrend. Then you can see this downtrend line. So if you really believe in the company, then anytime at these green support levels, so $14, $15, and they had one more that was over a 2 or 3 year time frame, was around 1250. But they are in a confirmed downtrend right now. I would want to see them break out above this trend line, so I'd pay $2 a share more for it, but I'd feel better doing that than buying it and going down to 12. To tell you the truth, that's my personal opinion. So I'm not interested in this company at the moment as far as the technical charts.
Thank you, sir. We're getting a lot of good questions today. So just we've talked about GMAB, and that's been kind of a stock we've talked about for the whole week. So my position size on GenMab is small. So these guys, I am showing up to the party a little late. The stock has been going higher, and I wanted to get into the stock because I think it's going to continue to go higher. Today it's down, so I'll probably look at buying some shares today, and or maybe I already transacted those shares. I think I did. And this stock's really working. I think it's going to continue to go higher because their performance has just been fantastic. Having said that, it's still a small cap. I'm showing up to this stock a little late. Now, I'd like to buy. I'm just going to stay in a small position. It's not going to ever be like a big giant position because I also see that I'm probably going to get out of the stock in a year's time and probably take a nice gain. I hope. I think it's going to happen, and then move on. It's not going to be a giant position. It's a biotech, and their patents are going to expire in 2 years, which is why I'm thinking along those lines. All right, so here's a compliment to you, sir. Somebody wishing you a nice rest of your day.
I think that's addressed to both of us. So
cool.
You take a bow as well.
Thank you, last half. Appreciate the compliment. Comment. All right, so man, this chat's moving on me. Right when I try to concentrate on a comment, it moves on me. So yeah, and here was the comment that you had on Life 360.
Yeah.
Shadow Guy making an appearance. Good to see you, Shadow Guy. Yeah, Fortinet, I think, is It's got good bones to it. It's got good value. It's been beaten down. It's in a good space. It's got a good forecast. It's like, all right, I did this with Zscaler. Let me see if I could do it with Fortinet. I'll make a 50% rate of appreciation, then make a decision. Do I get out or do I stay in? I happen to think that cybersecurity is many different options in companies. So we'll see where we get there. Good to see you, Shadow Guy. Bo, keep bringing them, buddy. Let's figure out how to make money. All right, position size. Novo Nordisk, which has been a pain in my side for most of my investing in NBO. It's been a rough ride, right? NBO has not been an easy stock. And on CRM, I'm going to have, I think, a clearer comment. But right, this one here, the reason I dollar cost average is if you look at this business, it's not supposed to be selling off this way. It's a growing business. They do have competition, but they are in a very good position with their patents. But the stocks really surprised me. And my position size on Novo Nordisk went from small to medium. I lost money. I brought it back down to small. Right now it's small. And there's a long ways up potentially for Novo Nordisk, but it has to prove that to me. And so far this month, it's been doing some good things. But if they can establish a nice upward trend, I'll put more capital into Novo Nordisk. On CRM, I've been waiting. I'm like just patiently waiting for this thing because it really sold off, became an opportunity in my opinion. It's establishing an upward trend. Have we looked at CRM already on the charts?
I don't know today.
Can you look at it, please? I'll turn it over to you in a minute. I'll comment on my position size. So right now, Salesforce is a small, medium-sized position. Call it more medium than small. I'm willing to take it to be a big position, and I want to accelerate it. If I see that the market's waking up to the value within Salesforce, and the last 2 days look good. Yesterday it was up 4% or so. Now it's up 5.47. I'm in. I'll be throwing capital at Salesforce, trying to build it up and having it be, a $75,000-$100,000 position. And I have to hurry up about it because if they start to go higher, this is a stock that can really perform in 26. So long as the market wakes up to the fact that it is a discounted stock, it's got good momentum. I mean, this is not charity, right? We're not buying stocks because we think they're nice and cool and nice people. We're making money. And Salesforce is nicely discounted. They have momentum. They have momentum with their agentic AI business. They call it Agent Force. They have a good situation going. So with CRM, it's going to be a big position. Okay. And let me turn it over to Daryl to show us the charts on CRM, which I'd be very interested in seeing.
So they are on a confirmed downtrend. They're 200 days declining, and we drew this trend line here, connecting a couple of points, and they've been trading under that since February of this year. We did see a longer term support line at this level right here. So that's around 225. That acted as resistance in 2023. Again, in September of 2023, acted as support in June of 2024, August of 2024, April of this year, August of this year, and it broke down below it in November of this year. So that seems like a pretty solid support line. They did break out above this trend line, so that's good news, but they're hitting the 200-day as resistance today. It would be great to see them close above this 200-day and maintain that over the next week. If that is the case, then that would be probably a pretty good entry point. But they're going to have to maintain it for a week before, from a technical point of view, they've truly broken and sustained this downtrend. They're not quite overbought at this point. So they have an RSI of 66. They did have a bullish crossover in bearish territory. And after some decumulation for a couple of months, or distribution, they are being accumulated today. And you can see that the money flow is positive. So it looks like the last 5 or 6 days have been up days for them. So they were showing some strength moving into the earnings, and they're maintaining it after their earnings. They're not out of the woods yet. They need to hold above this 200-day over the next week.
All right, so we got another super chat request, and I'm trying to answer some questions from you guys on the chat so we can scoot. We're up at kind of the 2-hour mark. We're above the 2-hour mark, so maybe we can finish off the last request and then move on. So what's a good entry point on Nvidia? Do you see it like Uber? And what's your guys' thoughts on Nike? So let's handle Nvidia first, and then we'll come back to Nike.
Oh, okay. I'm sharing. I was waiting for you. So Nvidia came down and hit a support line here. I added about 25% to my position here. Just in the last few days, I have a 204 to 208 price target by year end. That may be challenging, but I think the last 2 weeks is going to get us there. They did hit an all-time high of 212 back on the 29th of October. That might be challenging. It'll serve as resistance, but I see the price target at least to 204 to 208 by the end of the year. They have maintained an RSI of 40. Basically, since the tariff sell-offs, they've maintained an RSI of 40. Here they broke, and the RSI increased to the previous high. That served as a good entry point. They were at support, and that drove the price up to the 212. We have sold off, and we're staying right at that 40 line. Looks like they're leveling off today. I suspect we have another week's worth of weakness, and then I expect the price to run up. We're almost having a bullish crossover in bearish territory. I do see money flow starting to turn positive, and the accumulation is pretty much at a 52-week high. So I think it's at a good entry point, in my opinion, right now. And I've added 25% to my holding.
And on top of that, Nvidia is discounted by 11%, and it's a terrific business, and they're not going to slow down. Their forecast looks terrific, and it's probably going to get into a mode where it's going to take the playbook that Apple took, which is buy back a bunch of shares and make their stock more take shares off the exchange. The stock's going to be more scarce. It's going to be a good place for especially institutional investors, to invest and get a nice, 15% rate of appreciation over 5 years with Nvidia. And I think it's going to be, it's going to do well. Its risk has really come down. If you were sitting there at the end of 2022 looking at Nvidia, most investors, including yours truly, didn't believe the whole, they're going to be gigantic. The whole AI space is going to, blast off and so forth. But now I think everybody's convinced, okay, AI is a real thing. It's here to stay. And Nvidia has, I think, a lot of addressable market to take their high performance compute chips to markets. So I'm accumulating Nvidia. It's not going to be a giant position for me because I'm not getting the pricing that I would love to have. Unless the market wants to really discount it, then I'll add a lot of shares. But for now, it's a small position, maybe move to a medium-sized position, and I'm buying. Okay, so today was down. I bought some shares.
Also,
And
look at price to sales and compare that to the other big mega caps and see what you see.
its PE ratio is pretty darn decent, right?
Yep, and price to sales looks even better.
So if you look at Nvidia, and in this PE ratio, I don't like seeing the current PE ratio. I want to see the future PE ratio. So I should say the PE ratio for 2026, which is around the corner here. And it's for 2026, the P ratio is in the mid 20s for one of the most important businesses in the world right now that has high performance compute that is unrivaled. So it's like, man, you're giving me a 26 PE on a business like that. And then price to sales, what are we talking about here? It is, that's about, what is it? 20 some price to sales.
Yeah, go back to that other view where you had the mega caps listed. Yeah, and then go to columns, add indicators, and just, right, too little left there. It says indicators on it. Right there, yep. And do the price to sales. Look up sales, and it should load it up pretty quickly. I'm sorry. I had it on there the other day. It's under a weird indicator name. But anyway, Nvidia has the best of the big 8. So they're not overpriced in my opinion compared to the other names.
Yeah, I agree.
They're
and I think
better than Microsoft.
If we look at like Apple, right, it's maintained a P ratio in the 30s, and it's not growing. And Nvidia is growing, so it's doing well. All right, let's talk a little Nike. Nike has been a little dumpster fire, not a big one. It's not been an Intel level dumpster fire, but boy, this is not fun. 2021 to now, not fun. It's been brutal. And I don't think this business is all that attractive. Mid 30 PE ratios for a company that's not growing, for a company that has, we've been looking at these tech stocks, right? So we know what great looks like. We know Nvidia looks great. Gross margins, 42%. That's not great. That's kind of on the lower end. That's kind of like, well, it's not terrible, but it's not good. It's like in between those two. It's like, like getting a C as a passing grade. Hey, you're glad you got through the class, but you're not very proud of it. And profit margins, 6.2%. It has been as high as 10%. This is pretty good, by the way. If they can get back to 10%, I think the stock will work. But it's just not like I want to own Nike for the next 10 years kind of situation. they haven't shown me enough, and they do footwear. I think Nike's lost a lot of their mojo. It seems like, the heyday of Jordan and when they grew, that's in the rearview mirror. Now, I don't know that footwear is all that. I know it's important to a lot of people, but I don't think they're willing to pay $200-300 for a pair of sneakers all that quickly anymore. You have a lot of options. So I think Nike's going to struggle to get that big margin business. They've struggled on their revenue line. It's negative growth. This quarter looked, this was like they were celebrating 1% growth. Oh man. Times are tough when you're celebrating 1% growth. Like, oh man, we finally grew. Yeah, but don't celebrate 1%. That just means you have a pulse. And when we look at the forecast going forward, they're going to get back to some growth. Maybe some investors buy into it. So I could see the stock rising on this expectation and the PE coming down to 15 eventually. But this one here, you don't have to show up early. You can show up a little late and you'll still make a lot of money because this thing's been sold off big time. So I would wait for this thing to prove that it's on an upward trend. I would wait for it to prove maybe another earnings or two showing that their business is establishing growth. It has some good ideas. The market's receiving those ideas well. It's buying up their shoes. That's what I see in Nike. What do you think, Daryl?
You're not going to like it.
This is not rated PG.
Yeah, this is not rated PG. So I put this chart together probably 3 years or 4 years ago because I saw some younger investors that were all over Nike because of the prices. This is a trend channel that started in 2009. And basically, we're just tracking the lows within this trend channel and the highs within this trend channel. So this is 2009 to 2025, almost 2026. So 14 years worth of data. Once it broke out below this trend line, I started warning people. It did come back into the trend line and then fell back through and has never seen that trend line again for the last 3.5 years. Let's see, this is weekly data. Look at the 200 week. You're looking at 5 years average, moving average. It is going down. It's going to continue to go down for a while. The price will have to get above that line and trade there for a while before this downtrend ever begins to recover. So doesn't matter about brand, doesn't matter how great their shoes are, people aren't buying it, and I'm not buying it. I don't care, because what people may say is not what they're doing. They're selling this company off.
Yep. And Nike does have a strong brand, undeniably, but that's just not enough. You got to show me great financials. You got to show me growth, because the brand, to a lot of consumers, like I like Nikes, but it's all about what's on the shelf. And when I go shop for shoes, I might buy Adidas, I might buy Nikes. I've been wanting to buy some Pumas because when I was a kid, Pumas just look so cool, especially baseball cleats. The Pumas, the way they had their not their swoosh, but whatever that Puma line is, looked really cool. Well, Pumas were out of like my market forever, and now they're back. Now, I haven't come across a set of Pumas that I'd like to own, but I'm definitely going to try to buy a pair of Pumas and reminisce when I was a little baseball player, little leaguer, and how cool the Puma baseball cleats looked. But aside from that, one thing that I would comment on with regards to stocks, the stocks that I have a theory. The stocks that are easily understandable by the retail community, Nike, things that you can get your head around. What's another example that's easy to get your head around? I would say restaurant stocks. They tend to be very easy, understandable. Hey, I love eating at Chick-fil-A, or Chick-fil-A is not traded publicly. Bad example. Chipotle. And those tend to be easy to understand, but the fundamentals are more important. I mean, I can make a lot of money on a stock that is like Astera Labs. I don't know how to design semiconductors. I understand at a business level what they do and what where they operate, and they have great fundamentals. What I'm going to say about Nike is Nike's going to attract a lot of retail investors that are like, hey, it's a good brand, so I'm going to buy the stock. Okay, well, maybe that's a good decision, but maybe it's not. You're just basically, picking a stock because you know what they do and it's easy to understand. That's risky in my book because it's not substantiated by fundamental analysis. And I would rather buy a stock that's hard to understand, that has awesome fundamentals, that once the market understands these awesome fundamentals, I'm going to make a lot of money. That's my game. It's not let me pick the stock that everybody understands and everybody's in. No, that's not part of my process. So, Bo, thanks so much. All right, so let's kind of wrap up the show here. I'm going to do a quick flyby on comments, and then we will end things. Great work today, Daryl. So I think Mike already in Fort at making money. Good. CRM over Adobe, both. I'm buying both. I'll buy both. Thank you. I'll make money on both. Thank you. They're different markets, so I'm good. And then Mike, we did not say good things about SentinalOne. It did not look good. So Bo, so I think that Nvidia is going to be worth, it's going to double in the next 5 years. That's my high level opinion on that. So you held Nvidia in 2022. Yeah. Nvidia in 2022 did not look as beautiful as it looks today. Most definitely. Yeah, the World Cup's coming, but I don't know that bumps shoe sales a whole lot. We all know that Nike's a big advertiser. Basketball is a big driver. We're in basketball season. Yeah, apparel's not great. Thanks, Mike. All right, Bo, appreciate you, man. Good seeing you. Anderson, good to see you. Have a nice weekend. And then we are running out of time, sir. Maybe on the next stream, if you buy Super Chat, we can look at QXO. Yeah, both are doing well, and I'll buy both. Markets are making my stock in both of those companies go up. I did buy Adobe yesterday because its price was not up like Salesforce, but I thought it was a good opportunity. Yeah, well, TSMC is the semiconductor company to the world. So Broadcom, AMD, Astera Labs, there are so many semiconductor companies that are dependent on TSM that it's a risk that they're all taking. So it's not isolated to Nvidia. Nvidia is going to be fine. I don't think the Chinese are ever going to screw that up, which is TSM's a really, really, really important business. And I think the U.S. would really protect Taiwan if TSM is going to be disrupted. All right, one last look at the market. We are on modest gain levels. And looking at the heat map, Nvidia is under a little pressure. Looks like the rises in Meta have come down a little bit. Google's still positive. The CRM space is where the action's at today. This is where the action's at. I am glad I own a bunch of software stocks, and I'll be happy to buy into this strength, put capital into these winners. Man, stock investing's fun. So that's it, folks. Great job today, Daryl. Anything you want to mention about your channel that you're going to be doing?
I didn't get to the videos I mentioned yesterday, but I'm going to do one on Coke. It displayed a nice pattern and then fulfilled that pattern. So I want to make sure I share that one. So I'm going to do a video on that. And I have a couple other videos in mind as well. But yesterday I was tied up with a personal thing, so I didn't get a chance to work on them yesterday.
Well, there's always time on weekends. And thanks for doing this stream. This was a lot of fun, Daryl. I learned a lot today. Thanks for covering Astera Labs as well as everything else. And I'm having a lot of fun on these streams. Thanks for your partnership in doing this. I hope everybody enjoyed the stream today. I appreciate everybody tuning in. And we're going to be streaming again next week. I imagine I'll check with Daryl to see his availability, but I hope we can stream on Monday, Wednesday, Friday, and just kind of have this routine because I'm really liking it. I'm learning a lot. I think I'm becoming a better investor, and I'm getting a lot of awesome ideas from you guys. So collectively, if we can find some good stocks that we could see are going to perform in 2026, we all win. That's my goal with my channel. Everybody have a terrific weekend. Good luck with your investments today.
Talk to you later.